Silver is going to 200,000 rupees per kilogram. And the three reasons why are going to absolutely shock you. I'm not talking about 5 years from now. I'm not talking about some distant future scenario. I'm talking about a move that's setting up right now, and when I show you these three reasons, backed by data that cannot be argued with, you're going to understand why silver stackers who've been waiting since 2011 are about to be vindicated in the most spectacular way possible. The industrial demand crisis, the supply collapse, and the monetary reset that's coming are converging in a way we've never seen before. If you own silver, if you've been stacking, or if you're wondering whether it's too late to get in, the next 20 minutes will be the most important analysis you watch this year. Here's what they don't want you to know. Let me set the stage for what's happening right now in the silver market, because the mainstream media is completely asleep at the wheel on this story. In the last 72 hours, we've seen three separate but interconnected developments that are setting up the perfect storm for silver. First, the world's largest solar panel manufacturer just announced they're doubling production capacity over the next 18 months. That alone represents an additional 50 million ounces of annual silver demand. Second, the COMEX registered silver inventory just dropped below 43 million ounces, the lowest level in recorded history. And third, Mexico, which is the world's largest silver-producing nation, just reported a 12% year-over-year decline in mine production. Let that sink in. Demand exploding, inventory collapsing, supply declining. This is the setup for a price explosion. Now let's talk about where silver is right now in Pakistani rupee terms. Silver is currently trading at around 105,000 rupees per kilogram in the physical market in Karachi and Lahore. The international spot price says silver should be at around 92,000 rupees per kilogram based on the dollar price and exchange rate. That means there's already a 14% premium on physical silver in Pakistan. That premium tells you something critical. There's not enough physical silver available to meet demand at current prices. Dealers are charging massive premiums because they know if they sell out their inventory, they can't easily replace it. This is the early warning sign of a supply crisis that's about to go mainstream. Here's what changed in the last week that makes this urgent. JPMorgan, which has been the dominant manipulator in the silver market for decades, just reported their silver holdings in the latest Commitment of Traders report, and their net short position has increased to the highest level in 14 months. Now, you might think that's bearish for silver. It's actually the opposite. Every time JPMorgan has built massive short positions in the past, they've been forced to cover those shorts at much higher prices when physical delivery pressure mounted. They're trapped, and they don't have an exit strategy this time because the physical market is too tight. When they eventually have to cover, and they will, that's when we see silver go vertical. This is the coiled spring that's about to release. All right, let's get into the three reasons why silver is going to 200,000 rupees per kilogram, starting with reason number one, the industrial demand crisis. And I'm going to show you data that will blow your mind. Look at this chart showing global solar panel installation projections through 2030. We're going from roughly 300 gigawatts of annual solar installations in 2023 to over 800 gigawatts projected by 2028. That's more than a doubling of solar capacity. Now here's what matters. Each gigawatt of solar capacity requires approximately 20,000 ounces of silver. Do the math. The increase from 300 to 800 gigawatts means an additional 500 gigawatts, which translates to 100 million ounces of additional silver demand per year just from solar. That's 10% of total global silver production going to a single industry that barely used any silver 15 years ago. But solar is just the beginning. Electric vehicles are the second massive driver of industrial silver demand. A traditional internal combustion engine car uses about half an ounce of silver. An electric vehicle uses approximately 1 full ounce, and that's for a standard EV. Hybrid vehicles use even more, up to 1.5 ounces per vehicle. Global EV production is currently at 14 million units per year and is projected to hit 35 million units by 2030. That's an additional 14 million ounces of silver demand annually just from the EV sector. And I haven't even mentioned 5G infrastructure, which requires massive amounts of silver for base stations and network equipment. We're talking about another 30 to 40 million ounces of demand from 5G deployment over the next 5 years. Here's what they don't want you to know. Silver is the most electrically conductive metal on Earth. There is no substitute that performs as well as silver in high-efficiency applications. Sure, you can use copper, but you sacrifice performance. In solar panels, using copper instead of silver reduces efficiency by 3 to 5%, which makes the panels economically unviable. In EVs and electronics, silver is irreplaceable for critical connections and switches. This means industrial demand for silver is inelastic. Companies will pay whatever price they have to pay to get the silver they need because without it, their products don't work. When you have inelastic demand meeting constrained supply, price is the only adjustment mechanism, and that adjustment is always violent and upward. Let me give you the numbers that prove this is a crisis. Total global silver production from mines is approximately 820 million ounces per year. Industrial demand alone is now at 600 million ounces per year and climbing by 30 to 40 million ounces annually. Investment demand, which includes coins, bars, and ETFs, is roughly 150 million ounces. That's 750 million ounces of total demand against 820 million ounces of supply. You might think that's balanced, but here's the problem. Jewelry demand is another 200 million ounces, and silverware and other applications account for another 100 million. When you add it all up, we have over 1 billion ounces of demand against 820 million ounces of supply. The deficit is being filled by above-ground inventory, and that inventory is running out. Now let's move to reason number 2 why silver is going to 200,000 rupees per kilogram. The supply collapse. And this one is going to shock you because most people don't understand how the silver supply chain actually works. Look at this chart showing production trends from the world's 10 largest silver mines over the last 5 years. 8 out of 10 are showing declining production. The ore grades are falling, meaning they have to process more rock to get the same amount of silver. The easy silver has already been mined. What's left requires going deeper, processing lower grade ore, and spending more money per ounce extracted. The all-in sustaining cost for silver production is now averaging around $21 per ounce globally. At current silver prices of $24 per ounce, miners are only making $3 per ounce profit margin. That's not enough to justify major new mine development. Here's the critical point. It takes 7 to 10 years to bring a new silver mine from discovery to production. Even if silver prices double tomorrow, we wouldn't see meaningful new supply for nearly a decade. The supply response is delayed by almost 10 years, which means any increase in demand over the next decade has to be met by existing production or above-ground inventory. And as I'm about to show you, above-ground inventory is disappearing at an alarming rate. The COMEX registered silver inventory, which is the most transparent measure we have of available physical silver, has dropped from 150 million ounces in 2020 to just 42.8 million ounces today. That's a 71% decline in less than 5 years. Now let's talk about Mexico specifically, because this is where the supply crisis becomes real. Mexico produces approximately 190 million ounces of silver per year, making it the largest silver-producing nation on Earth. But Mexican silver production peaked in 2015 at 196 million ounces and has been declining since then. Last year's production was 178 million ounces, and this year is tracking even lower. Why? Mexican mines are mature, they're depleting, and the Mexican government has become increasingly hostile to mining through environmental regulations and taxation. Several large mining projects have been delayed or canceled due to permitting issues. If Mexican production continues to decline at the current rate, we could lose 20 to 30 million ounces of annual supply over the next 3 years. That's a 3 to 4% reduction in global supply, which would be catastrophic given how tight the market already is. Here's another supply factor nobody talks about. Silver scrap recycling has been declining for a decade. Look at this chart. In 2013, we recycled approximately 200 million ounces of silver from scrap and waste. Today, that number is down to 140 million ounces. Why is recycling declining? Because silver has been in a bear market for so long that people stopped selling their old silver items to recyclers. When silver was at $49 in 2011, everyone was bringing in their grandmother's silver teapots to sell. At $24, there's no incentive to recycle. This means we've lost 60 million ounces of annual supply from the recycling stream. And that supply isn't coming back until silver prices rise dramatically, which creates a catch-22. We need higher prices to bring out recycling supply, but without that recycling supply, prices are going higher anyway. Now let's get to reason number 3, which ties into the technical analysis. The monetary reset that's coming and what the charts are telling us about where silver is headed next. Look at silver in US dollar terms on the daily chart. We're currently at $24.18 per ounce. We've been consolidating between $23 and $26 for the last 8 weeks, forming what's called an ascending triangle. We're making higher lows while the highs are capped at $26. This is a bullish continuation pattern. When we break out of this triangle, which I expect in the next 10 to 14 days, the measured move targets $31. That's a 30% move from current levels. In Pakistani rupee terms, at current exchange rates, $31 per ounce translates to approximately 122,000 rupees per kilogram. But that's assuming the rupee stays stable, which it won't. The third reason silver goes to 200,000 rupees is the monetary reset. Central banks globally have printed over $15 trillion in the last 4 years. That's money creation on a scale never seen in human history. When you increase the money supply by 40% in 4 years, you devalue the currency by that same percentage over time. The only way to protect purchasing power is to own hard assets that cannot be printed. Gold and silver are the ultimate hard assets. Now here's where it gets interesting for silver specifically. The historical gold to silver ratio, meaning how many ounces of silver it takes to buy 1 ounce of gold, has averaged around 50-1 over the last century. Right now, that ratio is at 86-1. Silver is massively undervalued relative to gold. Look at this 50-year chart of the gold to silver ratio. Every time the ratio has gone above 80, silver has subsequently outperformed gold by massive margins. In 2011, when the ratio was at 83, silver went from $26 to $49 in 3 months, while gold went from $1,400 to $1,900. Silver outperformed by a factor of 3-1. We're setting up for the same scenario now. When silver starts catching up to gold, the moves are explosive. If the ratio reverts to the historical average of 50-1 and gold stays at $2,000 per ounce, silver goes to $40. If gold rallies to $3,000, which many analysts expect, and the ratio goes to 50, silver is at $60 per ounce. That's 150% upside from current levels. Now let's translate this to Pakistani rupee terms and understand why 200,000 rupees per kilogram is not crazy. It's actually conservative. Silver at $40 per ounce with the rupee at 300 per dollar, which is very likely given Pakistan's current account situation, gives you 156,000 rupees per kilogram. But remember, we're already seeing 14% premiums on physical silver in Pakistan. At $40 per ounce with a 15 to 20% premium, you're at 180,000 rupees per kilogram, and that's assuming moderate scenarios for both the dollar price of silver and the rupee exchange rate. If we get a true short squeeze on the COMEX, which I believe is coming, silver could spike to $50 or even $60 per ounce. At $60 with the rupee at 300 and a 20% physical premium, you're at 225,000 rupees per kilogram. The technical setup on the rupee chart is equally compelling. Silver in Pakistani rupees has been in a strong uptrend since mid-2023, making consistent higher highs and higher lows. The 50-day moving average has crossed above the 200-day moving average, forming a golden cross that typically precedes sustained rallies. The RSI is at 58, showing bullish momentum without being overbought. The MACD is showing expanding bullish momentum. Every technical indicator is aligned for a major move higher. The next resistance level is at 115,000 rupees per kilogram. Once that breaks, we have clear sailing to 135,000, and from there the psychological level of 150,000 becomes the target. So let me give you my specific predictions with timelines, because I want you to be able to track these and hold me accountable. Short term, in the next 30 days, I expect silver to break $26 per ounce in international markets. The catalyst will be continued drawdowns in COMEX registered inventory combined with increasing industrial demand data. When silver breaks $26 with conviction, we're going to see momentum traders and algorithms trigger buy orders that push us quickly to $29. In Pakistani rupee terms, that translates to 115,000 to 120,000 rupees per kilogram within the next month, especially if the rupee continues weakening toward 295 to 300 per dollar. Medium term, over the next 3 to 6 months, I believe we're going to $35 to $40 per ounce. The supply-demand fundamentals are so tight that once we break out of this consolidation pattern, the move is going to be fast and furious. Industrial buyers are going to panic when they realize there's a shortage developing. ETF buyers are going to pile in as silver makes new multi-year highs. Retail investors are going to chase momentum. And most importantly, the short sellers on the COMEX are going to be forced to cover their positions at any price. At $40 per ounce, we're looking at 155,000 to 170,000 rupees per kilogram in Pakistan, accounting for currency weakness and physical premiums. Long term, over the next 12 to 24 months, I believe silver reaches $60 to $70 per ounce, and that's when we see 200,000 rupees per kilogram in Pakistan. This isn't hopium. This is basic mathematics applied to supply and demand fundamentals that cannot be argued with. You cannot have 800 million ounces of supply, over 1 billion ounces of demand, and collapsing inventory without a massive price adjustment. The only question is timing, and based on the rate at which COMEX inventory is declining, we're running out of time quickly. When the market wakes up to this reality, the repricing is going to be violent and fast. Look, here's the bottom line. Silver going to 200,000 rupees per kilogram is not speculation. It's the inevitable result of three undeniable factors. Industrial demand is exploding and cannot be met with current supply. Global silver supply is collapsing due to mine depletion and lack of new development, and the monetary system is being reset through currency devaluation that makes hard assets the only safe haven. These three factors are converging right now, and the setup is unlike anything we've seen in the silver market in decades. This is the opportunity that silver stackers have been waiting for since 2011, and this time, the fundamentals are even stronger. If you found this analysis valuable, if these three reasons shocked you like I promised they would, I need you to smash that like button right now. Hit that like button because this information needs to reach as many people as possible. The mainstream media won't cover this until silver is already at $100 per ounce. By then, it's too late to position yourself for the big gains, and I want to hear from you in the comments. What do you think? Do you believe silver reaches 200,000 rupees per kilogram? What's your timeline? Are you stacking silver at these levels or waiting for a pullback? Drop your predictions and your strategy in the comments below. I read every single comment and I respond to the most interesting takes. If you're not subscribed to this channel, you're missing critical market analysis that could change your financial future. Hit that subscribe button right now and turn on notifications, because when silver breaks out of this consolidation and starts the run to 200,000, I'm going to be tracking it in real time with updates, analysis, and specific levels to watch. These markets move fast, and you cannot afford to miss the signals. Don't be the person who watches silver hit 150,000 and wishes they had seen this coming. The data is right here. The three reasons are undeniable. Position yourself accordingly. I'll see you in the next one. Stack on, stay sharp.